on the agenda of this European Microfinance Week. Perhaps you don't know, but the United Nations have said that 2025 is the International Year of Co-ops. So probably this might be, if Christophe is around, might be something for next year to pay attention to. And it's under the title, Co-ops Build a Better Future for All. And I'm here together with my colleague Patrick. And Patrick, but before starting, I just want to know about cooperatives. Is somebody here in this group member of a co-op? Not only a financial, it can be a producers or energy cooperatives. Is somebody member of a co-op? I see at least only, and I'm sure that there are some people more. There are people also in the governance of a cooperative. You too. I don't see not many fingers on the governance because that's the topic of today. And Patrick, perhaps you don't know, but he won the prize for the best graduate paper at the European Research Conference on Microfinance in Bergamo last year. He was first with his paper, Does Size Really Matter? Membership and Performance of Financial Co-ops. And Armande, she was second. So we have the best two people here in this room today. So regarding the governance, I leave the floor to Patrick.
Thank you, dear Kurt. Hello, everyone. I'm Patrick Mohola from the Catholic University of Bukavu. I made this research in connection with the University of Mons, where I've done my PhD. And I'm also a researcher in the CERMI. I don't know if you are about the CERMI. It's a research center in Belgium. It makes research on microfinance. So, at the starting, I would like just to fix a little bit difference between cooperatives and other MFIs. And for me, a key difference is ownership. Cooperatives, financial cooperatives at least, they belong to members and kind of collective ownership. So as they are member-owned organizations, so this presents some benefits. Okay, members know each other, they can participate, control, cross-control each other. That can help the institution, but on the other hand, that can present some challenges. Think about democratic governance and so on. So there is something to do with. And the issue is even deeper when you talk about growth. When the institution becomes larger, that can be a bit more complicated to deal with. So as I was talking about ownership, sometimes we're going to say it belongs to members. They are at the same time users and owners. But the user side, we know they have credit, they can make loan, that is simple. But what is being an owner? I tried in the first paper of my PhD examining the fact of being an owner. And in the end, I come up to 3 dimensions. The first one is formal ownership. You are an owner because you have some rights. Secondly, having the rights is not sufficient. You are an owner because you have kind of feeling. You have to feel it. That's what we call psychological ownership. In the last part, you have an owner because you are active, right? You have some role to play in the organization. So that is the 3 dimension of ownership. And yes, it is on cooperative, but it may be in every sector. You are an owner of this country. That may be formal, you have rights. That may be psychological, you feel it. And in the end, it may be active because you have some role to play. So I try to examine deeply what are the dimensions in each aspect. Like you have the rights to information, you have the right to participate in governance, surplus sharing, or even to get services. And my point is, if this is well done by the institution, you may really feel attached to the organization, belong to the organization, and that feeling can push you to participate, to raise the voice when something doesn't go well, or likely to become a good citizen, to act well for the cooperative. And the second aspect that we call psychological ownership, and the last one, active ownership. So I come up with the conclusion that when your rights are respected, you may feel becoming an owner, and when you have such feeling, you may actively participate for the well-being of your corps. So I come off the term, be an owner, feel an owner, and in the end, you may do as an owner. The be, feel, and do. So what if the organization, the cooperative, grows now, about the growth? So I try to assess the growth in membership and the performance of the financial cooperatives. You know, as I was saying before, small size. This means that we know each other, we have some common bonds, and that is helpful for the cooperative. It's even the ideology of financial cooperative. Even each cooperative, we know each other, then we can participate. But if you become large, we may benefit from economies of scales, economies of scope. So there is kind of plus and minus. So the question could be, should you really grow up or no? Then I try to connect this with financial metrics, financial performance metrics, portfolio at risk, OSS, return on asset, to see what is the effect of the growth in membership on those indicators. And so maybe I'll skip the methodology. You can trust me. I'm an academician, so different countries, different methods, different robustness check, and so on. So trust me, this is well done. So what about results? So I come up with the first result, and that seems contradictory result, because I show that my results show that when you grow in membership, a corps grow in membership, it positively affect the portfolio at risk. This is minus because, you know, when the portfolio at risk decrease, that is positive, but it negatively affect the operational self-sufficiency, and that is key. It's like you have green and red. That's a problem. Then I try to assess why could the OSS decrease. OSS is the ratio of operating expense, of revenue under operating costs. So then I try to assess the two aspects of OSS, and I see that there is no effect on expenses, an expense ratio when you grow, but the effect comes from the portfolio yield. The portfolio really decrease when you increase your membership size, so when the cooperatives increase. And then when I try to figure out and imagine why could the portfolio increase, because I was thinking about there's a problem of governance and so on. That's not key. The problem is portfolio yield. Then I see, okay, OSS decrease because of the decrease of portfolio yield. And when you try to see the portfolio yield, it's interest rate times gross loan portfolio. If there are some areas, you may minus loan losses. But imagine portfolio at risk didn't decrease, so there's no problem on loan losses. And when an institution increase, the gross loan also increase automatically. That's obvious. But the only explanation of the decrease of the portfolio yield and hence the decrease of the OSS is the decrease of the interest rate. And then I come up with the conclusion, can we really say that the institution becomes less performant if, because of growth, it probably benefits from the economies of scale and other things, and decide, because there is no problem on cost, and decide to decrease the interest rate? Then I say the decrease in interest rates cannot be interpreted as the decrease in performance, because, you know, a cooperative, that's kind of social organization. We are targeting the members and their well-being. So if we become large, and because we become large, we decide to give them loan at cheaper rates, That's good message. This is even a signal of social performance and not a financial underperformance. So, but I have to be honest. Here it is one aspect that I tackle the financial metrics. There could be other reasons. How could they grow? Do they really need to grow? So there seems something to do there. Maybe I will let the floor to Kurt to discuss this issue. Thank you.
Yeah, thank you. Yes, the OSS, perhaps for not familiar, this operational self-sufficiency. And it's just to make sure when the results is when operational going down doesn't mean that organizations are below 100%. So this is organizations, that's also not the idea of a co-op. It's maximizing not the profit, but maximizing the services. So for an organization, in perhaps contrary to some other ways of looking to financial performance, this is considered in the cooperative world as good. Keeping the operational self-sufficiency above and at the same time maximizing the services. But answering to the question, do they have to grow? I would say yes. And there is somebody once said, small is beautiful, and then he said, but big is splendid. And I think this is, you can use it, yeah, and then, but in the and I believe actually that microfinance, especially cooperatives, they grow. I don't think that they have a choice to grow today. And I see 3 drivers in this one. And perhaps to give you some background, the way that we work, I'm working for the BRS, that's the Belgian Raiffeisen Foundation. So this is, we are created by a cooperative bank in Belgium. So we are still linked to this one, and we know growing, we have a lot of growing pains. We learned it the hard way. Our cooperative bank once went bankrupt, so we survived this also. But the 3 drivers, one is competition. Today, competition is providing services to clients in your neighborhood, and if you want to survive and to keep this client-driven services, you have to follow. This is one of the drivers. Another one that I also see in the organizations that we are collaborating with in different countries today, because we're providing some advisory and coaching roles with our organization, that is the administrative burden that is growing and growing. So at the back office, you have this reporting, not from the regulator, but also from impact investors having much more requirements. The ESG is coming. And even if you say, I stay small, your back office is growing, and in order to pay this, you are forced to grow. And a third driver, and it's today here at the conference many times on the agenda, it's all the digitalization processes. They are costly. But it's about, like in the previous session I said, it's also about convenience to your clients. People asking it, also members of co-ops are asking this kind of services. So you are forced by these 3 drivers. And especially on that last one, digitalization, I just want you to state to some specific aspect. You know, for me, co-ops, they have always been in an interesting position. By having 2 hats, and some people in a co-op to have even more hats. You are a user, and you are an owner, and sometimes you are also at the board, and you are in a committee, or you have the head of the chairperson. You have many hats. That is very specific. It's creating a special balance in the organization. But what I want to say is, you have a lot of knowledge. Co-ops did have a lot of knowledge of their clients, not only data, financial, but they had this social understanding of your client and the family of the client, and they were using this for years, many years, into their decision processes on loans to their clients. So that was important. It's not only what does the person have, but who is the person, what's the family, what's the behavior, and you had also this social control also playing a role. But today, we see in co-ops that and in many financial organizations, the data-driven decisions become more and more important. And we learned it also here that impact investors, they do research on clients, and some, especially the smaller co-ops, are not aware about the gold they have in their hands of knowing their clients. And some of these co-ops, by linking in the whole digitalization, they are giving away this data. We see organizations that what the comparative advantage was of co-ops before, that to some other organizations, the fintechs, providing sometimes free services, that they take away a lot of data, and that co-ops are not always aware of this one. So I feel like that you have the three drivers. You have to grow, but at the same time, if you go into these processes, especially in digitalization, you must have also people, and we come back to the governance. Sometimes you have to reinforce the governance. In growing alone is not alone. You have also to adapt the governance. And here I think that Patrick, in his research, can contribute, like, if you grow, your governance has to be adapted too.
Yes, I think that's even key, because when you set up a cooperative, generally they begin small, and there is kind of, okay, we know each other, we believe that members will help, will participate. It's kind of informal mechanism, right? But when the institution grows, I really think that, as you say, it is a must to adapt the governance system, right? To become a little bit more professional. If you don't do that, it cannot fit. So for me, it is key when you grow. When I may say about governance, you know, in governance you have some internal governance mechanism. Look about the board, the CEO, the employees. How do you choose your employees? Who are the person sitting in the board? Are they really competent? Who is the CEO? So at each aspect, I think there is something to do when the institution grows. But at the same time, look about the external mechanism. Regulation can matter. So do we need specific regulation for big corps? Because if they are big, sometimes they need to be regulated, and they're not only regulated, but they kind of function like banks, because in my country I have big corps, financial cooperative, but they have the size, the operations of bank. They begin to do some loans of to very, very large amount of loans. So I think kind of regulation, kind of external control, really those things matters when the institutions become bigger. So don't overly rely on, member will participate. One thing that I saw in the last chapter of my thesis, my PhD, is what about the motivation of the member? Are you really sure? Are we sure if they will really participate in the control? What do we do to incentivize them to participate? And in the end, how do we control the CEO? That's even key. The CEO. What is the mechanism that we put behind to be sure that the CEO is really controlled? There are things that must be done when the institution grows, and I think it is key really to adapt and let's set up a very professional governance mechanism if we want to be sure that the growth will not negatively impact the institution. So thank you.
Yeah. I think I only can add that you have these checks and balances, what is in every organization, but it's especially true in cooperatives. There it's not the capital that rules who is the best, because it's in most organizations you have this one person, one voice, so the decision is decided on another base than just capital. But in that case you have all these checks and balances in the organization. It's what we say, you give in a cooperative a lot of trust to people. Like you say, they elect, it's going to be an election, but at the same time, you give them a lot of responsibilities. but you have to build in what we can sometimes say like institutionalized distrust. You must have these checks and balances in place because you know that that you have to control this very much. And yeah, that I think that co-ops growing, we feel, it's our experience, no choice, but by doing this, you must, as organization, be open to bring in new skills. I referred to the regulator. We have the same problem today in our co-op, that training of your members is important. Here in Europe, you have these regulations by the Central Bank with the fit and proper tests. So today in our organization, our bank, when we have people on the board, they have to do this fit and proper test, and therefore you have to look for people with the right skills, and if you don't have them with the members, you have to bring this from external, and this is a complete new set of governance. But it's a challenging one, and we are of course convinced that co-ops are the best because the United Nations are saying it. They build a better future for all. So yeah, I leave the floor to you because there's one thing that I learned from, that I got from Daniel Rosas. He said I cannot be there, but I have one instruction for you, Kurt. Make sure that your session ends before the buses leave. So, so there we have 6 minutes time for some reactions from the audience. Yes.
It's not really a question, but I was questioning if this impact on the portfolio could not just be because when they grow, there are more members, there are more power. Bigger group has more power, and the effect on the portfolio yield is finally to reduce the margin and reduce the interest rate. And when it depends, it would be interesting to see, I don't know if it's something that you did, to see the proportion in the cooperatives of borrowers out of the total members, because if they are all borrowers, is of interest for them to reduce the interest rate because they are members, they are clients, they are borrowers. So I'm wondering if the reason could just be that they are in governance, they put client first because they are the owner and the clients. So just, did you follow me?
That's a very nice, very good question.
Yeah.
All of them are not borrowers. You have net borrowers and net service. So there are borrowers and service. I don't think that we have the proportion, but I can. But yeah.
Just,
But
because if they have a voice and they are borrowers, they would like the interest rate to reduce. It's true that they are also owners, they keep a return, but
and that's the balance, because if they were all borrowers, you have net savers and net borrowers, and this is kind of net savers would like, no, we need higher interest on savings. Borrowers would like lower interest on loans. So as they are, at the same time we have both borrowers and savers, so it kind of a balance. It kind of balance, and I think.
But it's true in co-ops. Saving first, and I think it was for many years it was underestimated, the importance of savings for people as to have a safe place, to have the trust in savings. And for example, we saw it recently in with the partners in Uganda, that for example during the COVID crisis we had a microfinance institution with a lot of difficulties of repayments, and at the same time the co-ops that we are working with, they increased during that time their savings, and we were surprised of that. They were even growing during COVID time, 2 of the co-ops, because of the people were looking for this safe place, and it's considered as a service, and even some people are, they even want to pay for it or having lower interest rates, but to have it safe. That's sometimes more important than the interest. And that has always been in a co-op. If that balance, you need that balance. Savings as the first source, and then after that, of course, you can have also external borrowers, that's true, but savings first is one of the principles here. And if you have only borrowers, yes, then you have another kind of balance. But that's the interesting part. You are the owner and the user at the same time. So as an owner, you want to have high return on your shares. As a user, you want to have service, and that's the idea. Services first.
Hello, Davide Castellani from the University of Bergamo. A very short comment. So, based on my experience with cooperatives, so what I heard is that from the field, from many cooperatives, is that one of the issues in governance is the low participation of members in member meetings. If you want women in the board, the issue is how to make women to participate, first of all, into the meetings, and second, to have women with sufficient skills to take the role. And when I ask why have you been in power for the last 20 years, it's because no one else wants to take my role. And, because of the responsibilities and so I guess as you grow, I think that these problems, they become larger, right? Because you have to balance what you said, not the concentration of power, but funding the right skills with still having, a cooperative approach. How to engage your members, right, over time. So I don't know what's your experience with that.
That's a good point, because if we say, okay, we grow, then we shift all cooperative structure, form, ideology, then it's no longer cooperatives. But at the same time, if we still stick to that, it will not function. So we need to find the right balance. And I don't have the right balance, but I think it exists. And I like this example, because in my country, you have some cooperative that grew and fell down because they didn't really adapt. But we have a very successful example of one of now the leader among the corps. It grows, but you have the impression that it still sticks to the cooperative ideology. Members do participate. But in my understanding, it's not because the cooperative try to do something to push members to still engage or stick to the cooperatives, but it's like external advantages. The cooperative, okay, is grounded in the city, so it even has the name of the city. There are all members that know, that identify themselves to the corps. Because of that, they still psychologically attached to it, and it really works. Because of that, I think this is one of the reasons that it's really what are the biggest fail. Then I think, in the end, I think that's the key, because if we leave all the cooperative ideology, it doesn't work. But what to do? I'm thinking about cooperative education. I don't feel the terms really exist in literature, but I was thinking sometimes we have financial education, but I'm now thinking about what if we can teach people about cooperative. So I frame it in my PhD like cooperative education. I think there is something to do to push members still attached to cooperative values, and they try to adapt again and find a balance between the two, such as the cooperative can stay cooperative, but at the same time remain becoming professional. Thank you.
Yes, please.
Thank you. I am Patrick from Uganda, Liberation Community Finance. You picked an example from our country, post-COVID.
Yeah.
And I will give you two scenarios. We run a microfinance, and we acquired a member-based cooperative which collapsed, which couldn't survive post-COVID. and we are an MFI because we used quite institute strategies to restructure and try to find other ways of surviving post-COVID. Now, going back to your case, you realize that very efficient cooperatives in Uganda are value chain driven cooperatives. And I think it's the future of cooperatives, especially as they scale. I'll give you examples that in Western Uganda is where we have had the biggest success stories with cooperatives like Chamuhunga, Ebo, Mushanga, which are anchored on either tea, coffee, or dairy value chains. So members have a reason as to why they pledge loyalty to this cooperative. They have an underlying denominator why they should stay together. And the cooperative does not only help them into just saving and credit, but it helps them in upscaling their products and market access. For example, when you see Chamuhunga, that's in Western Uganda, you will see that it's a tea-driven cooperative. Therefore, members have to stay with it and pledge loyalty because it's the one which has contracts with off-takers. But in areas where there is no value chain-driven agenda for this cooperative, in other parts of the country, they have really, really struggled. So I just wanted to bring out that aspect that most of the successful ones are value chain-driven.
Yeah, thanks very much. And I think for the next year, certainly there are topics on this. You have the multi-purpose cooperatives, you have the value chain driven co-ops. So I think there are interesting topics. Unfortunately, I have to keep my promise to Daniel Rosas that nobody will miss the bus. I thank you very much for this extra contribution and see you all at the next time.